What's going on, goats? Welcome back to BooKoo Bucks. My name is Raymo, and today I'll be breaking down my trades that I took on oil futures this morning. If you guys do want to see the live rerun or trade with me for absolutely free, join the Discord in the link in the bio. First and foremost, let's check out the executions. This was the first short during London, which was a winner, and then the second one came right here during New York, and the third one in New York as well, and these were both break even. So, why was I looking to short? So, I was looking to short mainly due to the 1 hour time frame. On the 1 hour time frame, price was clearly in bearish structure. Looking at previous structure, we had a structure high down to a low. Price made a lower high and then made a lower low here. So, coming into London, I was anticipating price to make a new low. If you notice, price already gave a slight pullback and then price was down here during London. So it made logical sense that price most likely would want to make the new low as we anticipate price to make a new low since it is in bear structure. So I was looking for price to take out the previous day low or the hour low right here, just like that. So I went down to a lower time frame and waited for London to open up. As I stated before, we had a slight pullback and Asia gave this bearish move here. And then right here at the opening of London, I was starting to see that price was creeping closer and closer to this target that we just broke down. Going down to the 5 minute time frame, I believe this is where I saw a 5 minute break of structure, which was right here. Seeing price break this low, I did classify this as a break of structure. And then I was using swing high to swing low, and notice price pulled back into premium and then made a new low. Right here at the opening of London, we can see price is maintaining that bearish structure from swing high to swing low, and price pulls back before making a new low. So when I went down to the 1 minute time frame to refine an entry, on the 1 minute time frame, structure didn't really change a whole lot either. On the 1 minute, this was the current 1 minute high down to the 1 minute low. So as price was pulling on back, I was looking at this as a pullback because once again, price is in bearish structure. So once I seen that price gave me this bearish engulfing candle, I went ahead and took my short with the stop loss above this high up here. And then once again, I'm anticipating price to make a new low relative to the 1 hour time frame. So I was ideally looking to target this low down here. And then going back to the execution, you can see that I got stopped out in this area. What I should have done in hindsight is taking my full profits right here at this low. But what I did was I was actually trailing my stop loss little by little as price was progressing. Price made a new low here. I kept my stop loss at break even. Price pulled back, took out some more internal liquidity before pushing on lower. At this point, I didn't really want to close because price was still printing. Well, in this case, price was printing lower highs and lower lows, and this pullback had not happened yet. But at the same time, I wasn't willing to close my position just yet because I thought price potentially could go lower, which it technically did. But at the same time, I wasn't willing to simply move my stop loss at break even because the fact that price made its way down here, if I were to get stopped at a break even, I would basically hit myself in the back of the head for allowing price to pull back up on me so much and then not walk away with any profits. Meaning, price was actually in my favor or in profit for about 46 points. If for some reason price wanted to pull back another 46 points, I would basically hit myself in the back of the head, like I said, because I'm missing out on the opportunity to capitalize on that move. So basically, what I'm trying to say is from a psychological perspective, even though I am in a risk free trade, I wasn't willing to lose that much money if price were to pull back. So I believe what I simply did was I ended up pulling out the fib from swing high to swing low, and I put my trailing stop around the 62%. I was hoping that price would pull back up to here and then go on lower, but instead it ended up stopping me out a tad bit before going on lower. So the good thing is I still was able to capitalize on the move, but I definitely could have made a tad bit more. And what I probably should have done was taken full profits at this previous day low, like I said. I was also a bit more aggressive on my my trailing stop because I understood that since price took out the previous day low, if I zoom out a tad bit, seeing price took out the previous day low, I am anticipating a pullback to come into play, right? So if I'm anticipating price to pull back, I probably shouldn't hold on to my short positions. But at the same time, on the 1 minute time frame, price was still printing lower highs and lower lows. So I really shouldn't be concerned that price would go bullish because obviously the 1 minute has to go bullish before price can go bullish at all. And if you notice here in hindsight as well, you can see how price broke M1 structure, price gave a pullback, took out internal liquidity, and then pushed on higher. So once again, in hindsight, I should have either taken full profits at the previous day low or truly trailed the M1 highs. And then eventually I would have put my stop loss above this high and then got stopped out here. If you notice, getting stopped out here versus here isn't very much of a difference, but it is an improvement for sure. Now, to continue on with price action, I was still bearish because the 1 hour was still bearish, so nothing really changes there. But I started to believe that potentially, as price was pushing on higher, maybe price just wanted to take out some more buy side liquidity, such as this area, before going lower. So when New York opened up and basically took out London's high and took out these equal highs, I simply looked at this as a buy side liquidity sweep to go lower and even make a new low down here. In hindsight, of course, we can see price did not do that. Price ended up reversing, and it does make sense why it reversed because we just took out the previous hour low. But nonetheless, at the time being, I seen this as a sweep to potentially go lower. So with that being said, I went down to the 1 minute time frame to see if I can plot or find an entry. And right here on the 1 minute time frame, I did see that price gave a M1 BOS right here. So once price gave me the M1 BOS after taking out buy sell liquidity, I was looking to short. Coming from here, we had an M1 high down to an M1 low. Then we had a lower high down to a lower low. I was monitoring this range because if price is in bearish structure, I should look to try to capitalize on this bearish move or capitalize on this pullback, take a short, and anticipate price to go lower. But the reason why I did not short here was because trend line liquidity was resting right above it. Also, even if you're not using the trend line, we can simply see equal highs were resting above this area here and even right here. So seeing that their equal highs are resting above the extreme order block, this was not a good sign that price was going to respect the extreme order block. And if you notice, price ended up running up higher, taking out that trend line liquidity, or just simply put buy sell liquidity, and then we tapped into this extreme order block up here. So once I seen this, I was more enticed to look for shorts. Price was still sweeping out London's high over here. And then now price had tapped into the extreme order block after taking out buy sell liquidity. So what I did was I actually shorted off of this bearish engulfing candlestick and then moved my stop loss above this high just right here. And if you notice, price pulled back a tad bit more. Luckily, I had my stop loss above there because price wanted a tad bit more liquidity and then price ended up going into profit. Now from here, I'm ultimately looking for price to make that new low like this, which would give me about a 1 to 5 RR, which was looking good because at the moment, price was continuing to make new lows, creating new lower highs down to new lower lows. So this was looking fairly good. As price was pushing on lower though and made a new low right here, I moved my stop loss at break even. And if you notice, price came up and tapped my break even before pushing on lower. So unfortunately, I was not still in this move, but the good thing is I really wasn't losing anything because I was at break even. But I had to ask myself, did I move my stop loss to break even too soon? Because basically based off structure, or technically based off structure, we have a structure high down to low. Everything within here is all just simply a retracement. And so when I put my stop loss at break even, which was somewhere right here, basically I'm not giving price enough wiggle room to pull back deep into premium or pull back deep into the extreme order block if it were to do so. So when I put myself up, so when price hit my break even, I had to understand that potentially my stop loss was set to break even a tad bit too soon. So what I did was with you guys on the live as well, I said, you know what, let's watch to see how price reacts to this order block. I am very interested to see how it reacts here because as you notice, price pushed on higher, taking out the last bit of buy sell liquidity above these highs before pushing on lower. If this is truly distribution, meaning if the banks truly bought here to manipulate the buy stops before pushing on lower, there is most likely still buy orders resting in this area that need to be mitigated. So let's watch to see how price reacts. Now from here, I was monitoring the lower time frames Well, for one, before I even go there, once we got the bearish engulfing candle right here, we were able to basically take a short based off the way I teach it with a stop loss above here. But I was actually able to short and move my stop loss up here because I was basing this entry off the 15-second time frame. I was using oil futures for this, sorry, oil forex for the specific 15-second entry. But even here on oil futures, you can see the little change of character here. Then you can use this swing high to swing low down here and see how price gets up into premium, taking out buy side liquidity before pushing on lower. If that doesn't look very clean to you, check out oil forex and let's look at the exact same spot. So here's that exact same spot there. And then going down to the 15-second, it looks a tad bit cleaner. And then lastly, I'll pull this up to make it look even cleaner. So we have the structure low to the structure high, price makes the lower low, pulls back, takes out some buy side liquidity before it pushes on lower. So the seeing the 15-second basically gave me my confirmation or my extra confirmation to take shorts. But like I said, using the 1 minute time frame was simply good enough by using that bearish engulfing candlestick that I showed you. So once price was there, this is my third trade. Price falls lower, makes a new low. I move my stop loss to break even once again. So I understand that price could do the exact same thing. It could come back on up, tap the extreme order block, hit my break even, and then go lower. That is absolutely possible. But at this point in time, I started to get suspicious if the bearish analysis was going to be correct. The reason why I was getting suspicious was because typically on the charts, price will not move this cleanly, meaning price will not give you clean bearish structure where it taps into the extreme and then goes lower, taps into the extreme and goes lower, taps in the extreme and goes lower. It hardly ever does this. When it does do this, this is most likely just a setup for price to reverse. And why I say that is because it begins to build a trend line, which is simply just going to be buy sell liquidity. So if you find yourself in a position where price is doing this multiple times, I'm not saying price can't respect the trend line. I'm not saying price can't do this or price can't hit the extreme order block numerous times. But one, most of the time the charts aren't going to do this. And then when it does, be very careful because most likely it is just building up buy sell liquidity. And I bring that up because when I was looking at the charts here, I began to see how price tapped into the extreme, tapped into the extreme. And for price to tap into the extreme again was going to be highly unlikely. And if it were to do so, most likely at that point, it's just going to build that trend line liquidity. And thankfully, I put my stop loss at break even and allowed price to play out because as you can see here, price will rip to the upside. And why was price so explosive? It was very explosive because it took out all the buy side liquidity resting above these highs as price pushed on higher. Looking at the hindsight, it looks like we were just simply reacting from the 1 hour low. It makes sense why price was pushing on higher. Also looking left on the daily time frame, we did take out these lows over here too. So also to include the lows we were already looking at these lows, price is also taking out these lows. So a lot of sell side liquidity being swept. So that makes sense why price is pushing on higher. But at the same time, I'm trying to be very clear that if the lower time frames are still bearish, even if price takes out sell side liquidity, I would recommend for you guys to continue to look for those short opportunities because obviously if the lower time frame is still bearish, there is no way price can go bullish on the higher time frame. The lower time frame has to go bullish first in order to see price pull back or go bullish. So hopefully that makes sense. If you guys have any comments, questions, or concerns, drop them down below. Thank you for watching, and I will catch you in the next one.